Think back to your last losing trade. Ask yourself honestly, was it really the chart, or the market, that betrayed you? Was it the broker you are using? The spreads? The news? Or, was it fear? Fear that whispered in your ear, and pushed you to do the very thing you swore you would never do again. If you've been trading for any amount of time, you know exactly what I mean. Fear is the invisible hand that takes over your decisions. It hijacks your logic, and empties your account. Mark Douglas discovered this truth decades ago, and it changed trading psychology forever. Fear doesn't protect you from loss. It pushes you to create losses. And until you learn how to master it, the market will master you. Fear shows up in ways most traders don't even recognize. You cut a winning trade too early, because you're afraid the market will reverse. You hold on to a losing trade too long, because you're afraid to admit you're wrong. You skip great setups, because you're afraid of being hurt again, like last time. You overtrade, because you're afraid of missing out on the move. Notice the pattern? Fear drives almost every bad trading decision you've ever made. And here's the cruel truth. The market doesn't punish bad analysis, as much as it punishes bad psychology. Mark Douglas told the story of James, a trader who seemed unstoppable on the outside. He had wealth, luxury, and prestige. Net worth over $8 million. Armani suit. Rolex. A corner office with a view of the city skyline. But inside the markets, James was a prisoner. Every time he was up just a little, a few $100, maybe $1,000, he'd close the trade far too early. Not because the chart told him to, but because fear whispered, take it. Don't lose it. Don't risk it. Why? Because deep down, James wasn't just trading the market. He was trading against the voice of his father, echoing from childhood. Who do you think you are? You're not better than us. Don't try to be. To the market, James looked like a millionaire. But in his own mind, he was still a scared little boy, trying not to disappoint Dad. That's what fear really is in trading. Unresolved emotion, meeting market uncertainty. Here's the biology behind it. When you place a trade, and the price moves even slightly against you, your brain interprets it as danger. Your amygdala, the fear center, fires up. Your body reacts instantly. Heart rate rises. Breathing shallows. Muscles tighten. Stomach knots. And worse, your prefrontal cortex, the logic center, begins to shut down. Your IQ literally drops in that moment. You stop analyzing rationally. You stop following your plan. You freeze. You hesitate. Or, you panic. That's why traders say things like, I knew what I should have done, but in the moment, I just couldn't do it. It's not weakness. It's biology. But here's the good news. While fear may be automatic, your response doesn't have to be. Mark Douglas didn't teach traders to be fearless. He taught them to be self-aware. Your body always knows before your mind does. Think about your last painful trade. Where did you feel it? Your chest tightening? Your throat closing? Your gut twisting? That's your early warning system. When you feel it, pause. Ask yourself, is this trade really wrong, or am I just reacting out of fear? Because once fear takes the wheel, you're no longer a trader. You're a gambler. Fear has many disguises. Fear of losing makes you stay in denial, holding a loser while telling yourself it will come back. Fear of missing out makes you jump into trades too early, chasing green candles. Fear of being wrong makes you add to losers, trying to prove the market is wrong, not you. And here's the worst part. Fear repeats itself. It creates patterns. You cut winners early, again and again. You hold losers too long, again and again. You overtrade, again and again. Fear puts you in loops. And those loops drain accounts. But once you become aware of the pattern, you can break it. Here's the deeper truth. Fear itself isn't the ultimate problem. The real problem is self-trust. Most traders don't trust themselves to follow their own rules. That's why they hesitate. That's why they second-guess. That's why they break discipline. Mark Douglas realized this after his own collapse. After losing everything in 1982, he had nothing left. So he started again, from zero. His first rule was simple. I will always place my stop immediately after I enter. Day 1, he forgot twice. Day 2, he placed it, but was tempted to move it. Day 3, temptation even stronger, hand hovering over the mouse. But day by day, he trained himself. Until placing a stop became automatic. Then he added a second rule. Then a third. And slowly, his discipline grew. Not from winning trades, but from keeping promises to himself. That's how you build self-trust. Not by reading more books. Not by chasing gurus. Not by hyping yourself up. But by following through on the rules you set. One trade at a time. Here's the paradox. Most traders think they need more confidence. They think they need more motivation. They think they need another strategy. But what they really need is discipline. Discipline creates self-trust. And self-trust kills fear. Douglas coached hundreds of traders, from floor traders to hedge funds. And he noticed something fascinating. The traders with the most knowledge often struggled the most. But the traders who followed their rules, even simple ones, were consistently profitable. Not because they were smarter. Not because they had more indicators. But because they were aligned. Their beliefs matched their rules. Their rules matched their actions. Their actions matched their results. That alignment is what creates consistency. And consistency is what creates flow. Douglas gave his students a simple framework for building self-trust. Start with one rule. Make it simple, clear, binary. Example, always use a stop loss. Track it for 1 week. No excuses. Every day, log whether you followed it. Log every slip. Not to punish yourself, but to understand what triggered it. Celebrate execution, not profits. Did you follow the plan? If yes, that's a win. Layer gradually. Don't add more rules until the current one becomes automatic. Because self-trust isn't about confidence. It isn't about motivation. It's about certainty, the certainty that you will act in alignment with your rules, no matter what. That's rare. That's powerful. And that is the real edge. So let's be brutally honest. You don't have a strategy problem. You don't have a market problem. You have a self-trust problem. And until you fix that, no amount of indicators or systems will save you. The greatest traders aren't fearless. They aren't magical. They aren't superhuman. They are disciplined. They trust themselves. And that trust becomes their unshakable edge. So next time fear creeps in, don't run. Don't fight. Listen. It's showing you where you need to build trust. Because in trading, the most powerful tool you'll ever master, it isn't on the chart. It's in your own mind.